Hello, and we're live on YouTube. This is the beginner series, part one. Give me 1 second. I'm just gonna shoot downstairs, make sure that it's all working, and then come back. So you might want to skip the first 30 seconds. I'll be 30 seconds, and then we'll get into the video. That's cool. Yo, I'm back. So technical issues out of the way. Okay, so this is my first video on how to become a profitable trader from the very beginning, from never knowing how to look at the charts, things like that. So, how we're going to do this is by investing little amounts of money and trying to make lots of money off of that. So, just to get you proof before we started that I have received payout, I've just got to move this to the top of the chart. We're using prop firms to leverage capital, yeah? This is not me gloating, but this is just showing there's proof that you can make it. Everyone wants to watch videos of people that actually make money, not people who don't know what they're doing. But yeah, I'm on the beginning of my journey, so this is my first payout, so I'm making that clear from the start. That's where I am at, and yeah, I've not made hundreds of thousands just yet. This is from the beginning where to start. Okay, that bit else out of the way. Then delete that. Okay, so where to start? This is a chart. So this is the platform you need to use. It's called TradingView, and that's what you trade on, and that's what you use for your charting as well. So this is called TradingView. So download this platform here on your computer, and that's all you need to be able to trade. You need to purchase a thing called a prop firm if you want to start making money, if you don't have live money to trade with, which allow you to do challenges and make money like I showed you a minute ago from Apex accounts. Yeah, so you can use Apex, Popstep, there's lots of different ones, but ultimately you want one that links with this through TraderVate accounts. Okay, so that's the technical part of how to make money out of the way. Now we're going to get into what to do if you're a complete beginner. So if you've never looked at a candlestick, you might be thinking, well, what on earth does this indicate? So a candlestick is how price fluctuates throughout one time. Okay, so for example, you have different time frames you can look at the chart. So if you look up here where my mouse is, this is a 15-minute chart. So every candlestick will represent 15 minutes in price. Okay, so if I change this, you can either click here, or if you just enter on your keyboard like 5, you'll press enter, it'll take you to a 5-minute chart. Okay, the chart's currently not moving because we're over the weekend, and this is how price closed on Friday. So if you were to look at every candlestick, it tells you information. That's key to know. So we're looking at candlesticks to predict the future. So from this, you have the bottom of a candle, top of a candle. So I'm going to just make a few key points. You've got the open, high, low, and close. Yeah, so you need to know about this. This is like the beginning concept if you've never looked at candlestick. So where price opens on this. So if you think of like these candles are either black or green, so you can change the colours and stuff. The colour doesn't matter, it's just giving you information. So where the price opened on this candlestick here is at this level. So it opened, traded lower, and then traded up to the high, which is a tiny wick there, and then down to the close. Okay. On the bearish candle, you have it. Let me try and find this one. This is a bit easy to see. Open, high, low, and close. Okay, so you can see how it works through that. So you got open, high on this candle here, open, high, low, and close. So it shows the fluctuation of price in that candlestick. If, for example, you're not sure the difference between these two, well, a bearish candle is where the candle closes on here lower than the open. So then it will form a black candle. If it is a bullish candle, it opens and then closes above where it opens. So it allows you to look at how the price movement in this 5-minute chart. Okay, so if I was to just show you something now, which might help you understand this a bit more, is if I go to the daily chart and we go to the last day. Just moving this in so you can see. Zoom right in. So this candle, this is a daily candle. Okay, you've got one day. So this represents a whole day. So you've got Thursday and then you've got Friday. So on Friday, we closed higher than we opened. Yeah. You'd call this a bullish candle. If you think of a bull, something goes up like that as it like goes into like basically demolish someone, it goes like that as a bull. If you were a bear, you imagine the picture of a bear where they come down left way. So if you're bullish, you think price is going to go up. If you're bearish, you think price is going to go down. Okay, so this is Friday. So where price opens, I'll show you on the 15-minute chart. So now we're going back. So this day's Friday. So we opened, come down, that makes the low, makes the high, and then we close. So we closed where this black line denotes the day. We closed higher than we opened. So that shows the fluctuation of price in one day, just on a 15-minute chart. Okay, so it's showing the price fluctuations. So the way you can use this is you can use different time frames to see where price is going. So if I was on the daily chart, I'm looking price on Thursday, this candle here. I'm thinking, oh, well, it's going to keep going up. So we need to look at the daily candle. We're trying to predict what the daily candle is doing. Okay, so that's basically how candlesticks work. And then we're looking at the price to see what the algorithm is doing. So this is where we get into it now. So we've got the basic point out of the way. So you've got multiple time frames, and the candlesticks are doing the open, high, low, close on that candlestick. Okay, so every candlestick has an open, high, low, close. So the markets are run off an algorithm, which basically means we're using time and price, which the algorithm runs off to predict future price movements. So you need to have the belief that the market is run off an algorithm, which we will prove in this series. So you hear the story that 90% of traders lose money, which is true, and most of these traders don't believe the market is run off an algorithm. They believe in like indicators, which are basically things, and it's good if you're new and you don't know anything about indicators because they're all useless. If you've spent a lot of time in the past trying to become profitable and use indicators, you will know they'll work. From my own experience, I've tried coding robots and algorithms off the indicators and stuff, and it's very difficult to make any profit whatsoever. So this is how I've come into learning from ICT, so full credit to ICT, and that's how I know that this is the way forward and how you can do it. There's a lot more to it than just using X plus Y and then Y. Yeah, there's a lot more to it than that, which we're going to run through. Marcus run off an algorithm. The algorithm refers to time in New York and price. Okay, so run off an algorithm. It refers to time and price. So time is very important. What time you trade, and it also, you need to set the chart down here at the bottom right to in New York time. So whatever that is, just make sure it's New York time because the algorithm's referring to New York time. Okay. So what we're trying to do with traders, we're trying to become part of smart money. So what I'm going to teach you is smart money concepts. Smart money concepts, what they are is basically when you're looking at the chart and you're looking for how the algorithm is using the candlesticks. So for example, here we have a fair value gap and it goes higher. I'm not going to get too deep into that in this video. I just need you to have the idea that the smart money is targeting where all the orders are. So if I just do a little bit of a drawing to delineate what this means, to show you what this means. Let me just get you. So smart money represents the small winners. And then you have a bigger pool of traders that are retail traders or newer traders, and this is more uninformed money. So they don't believe in that the market's going to try and get their orders. They believe that the market, for example, is ran off indicators, or when the volume, say there's a high volume of orders, they'll go off that. Things like that aren't actually relevant, because we need to use things from smart money that can predict the future, not things, we don't need to look at past data other than the candlesticks to predict the future. Whereas other people are looking at so many irrelevant things that aren't working. So what bridges the gap between smart money and uninformed money? Well, you have market efficiency paradigm. You need to be indifferent to this concept, meaning all that it's not people, the trade, they aren't out to get you as such. What they are trying to do is be efficient in the way they're filling price. So the market's trying to book orders. So what that means is that it needs to fulfill people's orders, and that's all the market is doing. So where people's orders are, it's likely to go to that where the retail is, because that's where a lot of the orders are, and a lot of what it's doing is trying to bridge that gap. I hope that makes sense. So we want to be part of the smart money and use smart money concepts to try and target people's orders. People who are unprofitable, they're not trying to target other people's orders. They're just thinking, oh, price is going to keep going here, or they have no sense of there's winners and losers in the trade. So you need to have that belief system that there are winners and losers in the trade. Yeah, so that's my sort of mindset, that I'm trying to become a winner by targeting other people's orders, opposed to just thinking, oh well, we've bought this indicator, price is going to go up. Okay, so that's the main thing so far, just having that belief. We'll run off an algorithm, but you probably won't believe it until we go through more and you start to see it, and you learn what the algorithm is looking at, which are called premium or price delivery, arrays, which I'll get into more in the next video. Okay. Key element to also becoming a good trader, which I'll include on the beginner video, is that if you're thinking the price is going to go up, that's called a long position. If you think price is going to go down, so you're bearish, that'll be a short position. So bullish for long, short for bearish. So for example, say we take a long position here. A lot of people who are trading will not have what you call a positive risk to reward. So risk to reward ratio, which it shows you here, is when you have a smaller risk to what you're willing to win, and that's key to becoming a good trader. And then in line with that is you need to set a stop loss, which will be here, and you need to set a take profit at a positive risk to reward, and that's another key element of becoming a good trader. For example, to say you have a risk to reward at 1-to-1 like that, and you win a trade, you need to be right more than over 50% of the times, yeah? So you lose one, you win one, you lose one, you win one, and that would be break even. So you need to have, so with the idea with this, is we don't even need to be right half the time if we're having, say, 3-to-1 risk to reward, yeah? So you can afford to not be perfect, but ideally, if you're setting yourself this target and you're also right more than 50% of the time, you're going to be a profitable trader. So the road to profitability is having that good risk to reward ratio, and then that good risk management where you're setting yourself, say, a certain amount of loss per day, a certain amount of loss per trade, and then we end from that. Okay, there's the basics done for this first bit. And yeah, I think that will do for the first video, and the second video I'm going to talk about time more. So yeah, back to it. So yeah, I hope you enjoyed this video. This is very starting block of everything, so I hope you enjoyed, and yeah, peace out.